Hello guys, welcome back to the channel. So, as most of you are aware, I had an infection in my eye, which prohibited me getting on the charts. But I had a trade on the euro dollar. It was a swing trade because I took it from down here and I closed it here. And then most of you were interested to know how I took the trade. Now, guys, do not use anything you hear from my videos as a financial advice. We all know that I'm not permitted to do so. But let me start by also saying that if you want to understand the concepts of Michael, the inner circle trader, you need to understand liquidity. You know, liquidity is mostly known, people call it as fake outs, people call it as the turtle soup, people call it the creation of the order block. And by the way, the turtle soup creates the order block. The Judas swing creates the order block. Stop hands is the creation of order blocks. All these terms, don't be confused by all these terms. They all mean one thing. In the retail terminology, we normally call it stop outs or stop hands, fake outs. And then for those who trade what's known as the smart money concepts, they use terms like the turtle soup, the Judas swing, um, so many names out there. But don't be confused. It's one and the same thing. And by the way, in most cases, the turtle soup in the retail way, it's also known as an engulfing candle. For those who know engulfing candles, for those who know the inside candles, I'm sure these were the basics we learned when we all started learning how to trade, but we never paid them attention because, by the way, there was no one to fully explain how they work. They'll only tell you this is an inside candle, but then how do you utilize it to make money in the markets? And for me, I believe the inner circle trader was the one who truly, you know, gave meaning to the charts, the candlesticks, for me to understand, okay, this is what is happening in the market. For instance, I give an example. You see this candle right here, down candle, this small candle right here. In the retail, it's an inside candle. This candle that is bigger than the bullish candle is called a bullish hammer. This is, I think it's a bullish, no, not a bullish hammer, it's a bullish harami. Bullish harami. But then when this red candle is bigger than this one on the left, this is called an engulfing candlestick. Now, with an engulfing candlestick, if there is a wick above this candle, it means this is a turtle soup. Anything above this high, that's a turtle soup, that's a grab of liquidity, that's a fake out, that's a Judas swing. All these names, they mean the same thing. Okay, so master the liquidity, because before every move happens, there is always a fake out. Always, even if you go on the 1 minute time frame, there's gonna be a force move before the actual move happens. And that's why in my trades, and I always emphasize, I go for liquidity first. I have to see liquidity. And once I see liquidity, I look for structure. And what is structure? Structure, it is basically to understand the way the candlesticks are structured to print, or they are programmed to print, right? So I'll look for those PD arrays that will confirm, PD arrays or structures that will confirm that actually this was a grab of liquidity and now we are reversing. So go for the structures, the turtle soups, the same thing. For the liquidity, the Tito soups, and all that stuff, and then look for the confirming structure. All right, so now this is on the weekly time frame. The first thing that I noticed was that price has retraced all the way down where we had grabbed the liquidity in the past. And which candle grabbed the liquidity? This was the candle that grabbed the liquidity. And that's why when we broke it to the upside, we had a down candle that tapped the high of this candle, and then price went up. But then before that happens, we had another down candle right here. Now move it to the right. You see this down candle? This is what is known as the ICT propulsion block. A propulsion block is a candle that is in the range of the order block. If this order block was to tap the liquidity and we have upside candles that broke it, like this candle, if we had broken it, so the third candle would retrace to touch the order block to go up. But in this case, when price created the order block, we had a range. Now this range created a down candle, a bullish candle, and finally a down candle. So this down candle, which is in the range of the actual order block, is called a propulsion block. And you can see in here, price came back into the opening price of that propulsion block. This is on the weekly time frame. So I had that in mind, so I'm going to remove it. But just take note that we had this propulsion block. And then we had this. The previous week, this week, the weekly candle, I'm sorry for that. This weekly candle went through the previous week and then fell to close below. When that happens, this week from here all the way down becomes a turtle soup, right? A grab of liquidity. By the way, uh, uh, there's some good old videos by ICT. If you go to his channel and look for videos from 2016, 2016, you will find some really, really good teachings. Okay, so it's the same thing like previous days high being taken, previous days low being taken. So the previous week can be taken, previous month can be taken, and that would signify that we are in premium or discount, and we could be reversing. In this case, when the previous week low has been grabbed and the current week fails to break to close below, price is in the discount, has been discounted, therefore we could see a reversal. But the question is, what is the next draw on liquidity? The next draw on liquidity is the next swing high, of which is this one. So there you go, like that. So I'm gonna remove this. All right, I'll go on the daily. Now, on the daily, you can see, let me just remove this. This is the candlestick that closed below these two candlesticks. So this is a structure that we will use to find trades to the upside. So I'll just mark it like that, and then I'll go to H4. Now you see, it all makes sense now. I'll remove that just for a second. Now it's making sense. Remember, this is the previous week's low. And now this is going to be a swing trade. All right. But the same concept can be applied on the daily candlestick when the previous day's low or high is taken and we have a shift in market structure. We all know this stuff from the 2022 mentorship. This is like the 2022 mentorship actually. So now we go down. I want price to come in that daily candle, especially the opening price. This was the opening price. So in there. So remember, I'm putting my entry on the opening price of the order block. Excuse me. This H4 candlestick is equally an order block, right? So this is where, of course, the stop loss has to be bigger below this candlestick because this is the protected area. Why is it protected? Because we have an order block that ran on stops right here. So this swing low has to be protected, meaning price is not allowed to come and close below. See? We came back the second time, but because this is a swing trade, don't be scared when price comes back to your entry. And that's why when you are involved in a swing trade, you shouldn't be in a hurry to lock in your profits. You should watch structure before you can lock in your profits. And so the target was the next draw right here. Now that we have broken structure, I want you to hear me closely. Now that we have broken structure, I can actually move my stop loss from here and lock in right here, right? Now, this was my model A. Why? Because we've traded a reversal. So along the way, you can scale in your trades by model B. All right, we just noticed a creation of model B right here because of learn on stops right here. All right, maybe this is the actual model B because this was a week, but these are actual candlesticks. Which of these is the order block? Not the last candlesticks. This is what I always talk about. The order block is not the last down candle. It's the candlestick that is responsible. All right, right here, responsible. Look at that. So that would have been your second entry on model B. I'll mark this as the order block. And then I'll just say model B. Okay, I'll just remove this because you already know my target. And then I will indicate that that's model A. Let me repeat. Model A, grab of liquidity, shift in structure, return to retest. You can also use your fib, 50%, entry, stop loss here, and that's your model A. Model B, you wait for a creation of structure, you wait for that to be liquidated here. By the way, this week, if you go maybe on H1, you can find an order block which you could have used to enter, but then after price has gone here, price will come and take your order out because on H4 we created another order block. And if you are taken out at break even, that's okay. All right, so let's see. Now this trade is at break even. All right, we tested once again. So if your order was at break even here, price retest the order block again, and you are taken out, you can be confident to enter again on this candlestick. By the way, this is not even pre-planned, guys, because my entry was here. I never added more entries on this trade. So I just thought I should check if there was a model B in here. So therefore, the first entry on here was taken out, break even. But if you follow my rules of putting your order to break even after a structure, then your order will still be intact. Okay, so let's go. Okay, now that we have broken structure, we have this structure broken, and we have a minor structure broken here. You can move your stop loss from here and lock in. Then this stop loss here, you can bring it and just put it down here. So we follow structure to set our stop loss. Keep going. Let me just use this. All right. We hit it, but then let's see. Our stop loss was below this, was right here. So when we created this one and then we broke this one, your stop loss should be moved below this swing low. You see how you keep following structure, and when this minor one is broken, you move your stop losses just a little bit, not so close because price can come and liquidate this low, just maybe a few pips below this low, and then you see the target is tagged. And you see how I did a top-down analysis from the weekly time frame to the daily, where I identify the order block on the daily time frame, and then on the 4 hour I identified the order block on the 4 hour time frame. And you see how I kept following the structure, not looking for sales. I didn't mention at all looking for sales because you've already have your trading range. That price has to be bullish, so there is no way you would be looking for sales in here unless you were looking for scalps, which would be also a bit dangerous, especially that you are in a swing trade. Okay, so there it is. It's hit. And what do I think of the next now that our target has been hit? Well, we can also look on the monthly time frame. So what I think, this swing high has been taken on the daily. Let's see. We could see a major retracement. I'm sorry, not this one. I wanted this one. We could see a major retracement uh, because on the weekly time frame we have taken this swing high. So if we see a creation of the order block, then we could see a major retracement. Like for instance, if we see this candlestick taken, you see price has just grabbed it, but there is no there's no break of structure, because if we break this candle, then we would assume that this candle would be used as an order block to go down. But hey, these are swing trades on the lower time frame, like on the daily. You can still find trades like If you come here, you find the previous day's high taken. So you look for a reversal here to go down, and then here the previous high is also taken. And then what do you look for? For a reversal. A reversal in terms of what? You can look for the order block, or you can look for the market maker sell model. All right. So I hope this is it. It explains how I took these trades. And like I said, just look for a fake out, which is liquidity, and then look for confirming structure, then target the next pool of liquidity, which would be the next swing high. As easy as that. As easy as that. So I want to look for something, just a small thing right here. For instance, one simple example. Previous day's high is taken in Asia. I want to see when London opens. London opens on this candle. We already have a reversal. Why? Let's see on different time frames. This was the candle. Now, people will tell you these are order blocks. This candle is an order block. Actually, this is also an order block. Why? Because we took a small swing high before reversing, and that's why price came back to this candle right here. You see, touch, and then we go down. But the other order block, which confirms the daily candle, is this one here. That's why this candle tries to break it, we fail. This one breaks it, and look at this one. This one comes back into it. Maybe we can check it on the 15 minutes. You see, we try to break to come back into it, fair value gap, and then we fail. So on the candle for London, this one here, we can go on M15 and see what happens. Now the order flow is bearish. Do not look for buys. When you see previous days high taken, we have the order block that is respected. Also, this is like a market maker um, sell model. You see, this is a market maker sell model. So see in here now, London opens on this candle. I'll go on M5. What is it? Here. We come back in this structure, 50% of that, but then this minor structure gets liquidated. I'll go on it, and then when it gets liquidated, we have this as order block, but then price barely touches it. So but then there is a fair value gap. For those who trade fair value gaps, this should have been your entry. But for me, there is no entry since I don't enter based on fair value gaps. Entry, and then we go down. So I hope this blesses you guys, and stay well and stay safe. Until next time, thank you.